Peter Spencer. Peter, tell me just first, how did the British economy become so indebted?
Quite simply, the world's financial markets, as you know, were awash with cheap and plentiful credit emerging in the first instance from East Asia, but then OPEC countries. We, like the Americans and many others, took full advantage of that and basically backed up the truck, didn't we?
And did that leave the British economy in a worse position than some of the other economies? How was it that
Certainly,
that came about?
as one of the world's biggest borrowers, we were hit for six by the credit crunch. Of course, countries like Germany that specialised in exporting were hit later when world trade fell. But no, we have been one of the biggest victims of this crisis.
Tell me more about this rebalancing that you think that the UK has to undergo over the next decade.
Quite simply, that has all unbalanced the economy. We have an economy that has a savings rate that is too low and an exporting rate and an investment rate which is also too low. We have to swing that. We all, as private individuals, have to save that little bit more, borrow that little bit less going forward. And, of course, that means that the income, which at the moment is coming from the government, basically so far what's happened is all of that private sector borrowing has just been replaced in this emergency situation by public sector borrowing and public sector demand. We're seeing that right the way across the economy at the moment. But the more difficult job will be to replace that government borrowing, which is not sustainable, by overseas income, overseas demand.
Now, look, we've seen a drop in sterling, a pretty sharp drop in sterling. How much is that going to be a driver in encouraging companies to go overseas again?
That's going to be a facilitator rather than a driver. The real drive is going to come from the fact that unusually the home market is going to remain very, very weak. Normally, companies would expect the home market to pick up quite considerably at this kind of stage. But with everybody cashed out, that simply isn't going to happen. And they're going to be forced to look out elsewhere for those markets, for those revenues, and that's where the pound will simply be a great help.
Tell me just a bit more about the structure of Britain's economy and its export base, because there's a lot of people out there who've got the impression that Britain's export base has been decimated over the last decade or so. What base is there from which the economy can grow now?
Well, that decade of debt was a decade of a high pound, basically from 1997 through to 2007, when we saw the big crash in the value of the pound. The pound was way overvalued, and that certainly didn't help. We did see a steady erosion of capacity in a range of export industries, and of course, let's not forget, we saw an erosion of our world market share, particularly in the newer markets in East Asia. So we're actually starting from way behind on the grid. But with the various changes which we've discussed, the weak home market, we're going to have to push up to the front of the grid quite quickly.
Let's just have a look at some of the policy implications this has. For monetary policy, what's your expectation for the Bank of England this year?
It actually starts really with fiscal policy, where the government is already tightening up, and of course things are going to get tighter as we go through April the 6th and then past the election. Everything there is tightening up. Normally in that kind of a situation, you would expect policymakers at the Bank of England to start cutting interest rates. Well, of course, they can no longer do that. So our prognosis is that those interest rates are just going to be pinned to the floor by the weak economy and the tightening fiscal picture.
Just very briefly, inflation going through to 2010, what's your view?
It'll certainly be on the rise in the first half, but I'm afraid any concerns about inflation are overdone. This economy is seriously depressed. It will remain weak, and that will keep inflation at those very low levels.
Peter Spencer, thank you very much.